What if the biggest threat to America's future already happened somewhere else? Most people never notice a financial mistake until it's too late. Japan once looked like the world's most unstoppable economic machine. Its factories powered global markets with remarkable efficiency. Its companies became symbols of innovation and success. Its economy expanded faster than many experts expected. Its citizens enjoyed rising wealth and growing confidence. The future appeared brighter with every passing year. Investors believed prosperity would continue for generations. Homeowners watched property values rise almost effortlessly. Businesses expanded aggressively across international markets. Banks competed to lend money to eager borrowers. Success created a powerful sense of certainty. People stopped asking difficult financial questions. They assumed tomorrow would look like today. And that assumption changed everything. By the late 1980s, optimism was everywhere. Real estate prices climbed to astonishing levels. Stock markets surged higher year after year. Investors celebrated gains that seemed almost guaranteed. Financial magazines praised Japan's unstoppable momentum. Economic commentators predicted even greater growth ahead. Many believed Japan had discovered a new economic formula. Traditional concerns suddenly seemed outdated and unnecessary. Risk appeared smaller than ever before. Confidence became the dominant national emotion. The higher prices climbed, the stronger belief became. People borrowed money to buy more assets. Investors purchased properties they could barely afford. Companies expanded, using increasingly larger amounts of debt. Everyone expected rising prices to solve future problems. The system appeared self-sustaining and unstoppable. Yet beneath the surface, dangerous weaknesses were growing. Asset prices became disconnected from economic reality. Speculation began replacing careful financial analysis. People focused on profits instead of fundamentals. Valuations reached levels that defied common sense. Still, almost nobody seemed concerned. Success has a way of silencing skepticism. When everyone feels rich, caution feels unnecessary. When markets keep rising, risk feels invisible. That illusion can last surprisingly long. Then reality finally arrived. Japan's stock market began falling sharply. Property prices started moving downward as well. Confidence disappeared much faster than it arrived. Investors watched years of gains evaporate. Families saw their perceived wealth shrink dramatically. Businesses struggled under massive debt burdens. Banks faced growing financial pressure. Economic growth slowed throughout the country. Many expected a quick recovery. That recovery never arrived as expected. Years passed with disappointing economic performance. Then more years passed. Entire careers unfolded during stagnation. Many investments failed to recover for decades. An entire generation learned painful financial lessons. Japan's lost decades became a warning for economists worldwide. Yet many Americans rarely think about that story. That may be a mistake, because the similarities are becoming harder to ignore. America currently enjoys enormous economic advantages. Its technology sector leads much of the world. Artificial intelligence is creating tremendous excitement. Stock markets continue attracting global investment. Retirement accounts grow through automated contributions. Millions believe long-term prosperity remains inevitable. Those beliefs sound surprisingly familiar. Japanese investors once felt exactly the same confidence. They believed strong growth would continue indefinitely. Many Americans now hold similar expectations. Consider the housing market. Home ownership remains a central part of the American dream. Many families view homes as wealth-building machines. Property values have risen dramatically in many regions. Some buyers stretch finances to secure ownership. They assume appreciation will justify today's sacrifices. That assumption may prove correct, but assumptions are never guarantees. Housing markets can experience long periods of weakness. Affordability challenges are becoming increasingly visible. Wages have struggled to match rising home prices. Mortgage payments consume larger portions of income. Younger generations face barriers previous generations rarely encountered, yet many people still expect prices to keep rising. The confidence itself deserves attention. Japan experienced similar confidence before its downturn. The danger wasn't housing ownership itself. The danger was believing prices could never disappoint. Stock markets reveal another important similarity. American investors have enjoyed remarkable returns recently. Technology companies created extraordinary amounts of wealth. Index investing became a widely accepted strategy. Millions invest automatically every month. For many people, investing feels straightforward. Buy broad market funds and wait. Historically, that approach has often worked well. But success can create dangerous expectations. Some investors assume future returns are guaranteed. They rarely consider alternative outcomes. Many younger investors never experienced prolonged stagnation. They witnessed corrections but not lost decades. As a result, expectations continue rising. Rising expectations increase future disappointment risks. Japan offers a valuable lesson here. Even healthy economies can produce weak market returns. Strong countries are not immune to investment challenges. Economic success does not guarantee investor success. Valuation still matters. Expectations still matter. Human psychology still matters. That brings us to another concern. Consumer debt continues reaching significant levels. Credit card balances remain historically high. Auto loan obligations affect millions of households. Student debt burdens continue shaping financial decisions. Debt often feels manageable during prosperous periods. Rising incomes help offset financial obligations. Growing asset values create confidence. Economic expansion encourages spending, but conditions can change quickly. Debt remains even when optimism disappears. Monthly payments do not vanish during downturns. Financial flexibility becomes increasingly important during uncertainty. Japan discovered this reality firsthand. Many businesses accumulated debt during good times. Those obligations became burdens during slower growth. The same principle applies everywhere. Debt amplifies both success and struggle. Technology presents another fascinating parallel. Artificial intelligence may transform countless industries. Productivity improvements could reshape the economy. New opportunities may create enormous wealth. Innovation remains one of America's greatest strengths. But innovation alone does not eliminate risk. History repeatedly demonstrates this lesson. The internet transformed modern life. Yet many internet-era investors lost fortunes. Excellent technology does not guarantee excellent investments. Sometimes expectations become too ambitious. Markets often price imperfect futures. Reality rarely delivers perfection. This gap creates vulnerability. Japan experienced similar optimism around economic growth. Many believed prosperity would continue uninterrupted. The assumption felt reasonable at the time. Most assumptions do. That is what makes them dangerous. The greatest risks often feel harmless initially. They become visible only after conditions change. By then, adjustments become much harder. So what should ordinary people learn from this? The lesson is not fear. The lesson is preparation. Financial resilience matters more than prediction. Nobody can forecast the future perfectly. Nobody knows exactly what markets will do. Nobody knows how technology will evolve. Nobody knows when economic conditions might change. Preparation works better than prediction. Strong savings create valuable flexibility. Manageable debt reduces financial pressure. Multiple income sources increase stability. Continuous learning improves adaptability. Patience remains a powerful financial advantage. The most resilient people avoid extreme assumptions. They prepare for both good times and difficult times. They understand uncertainty never disappears completely. Even prosperous periods contain hidden risks. Even difficult periods contain opportunities. Balance often outperforms certainty. Humility often outperforms confidence. History rewards those who remain adaptable. Japan's greatest mistake was not investing. It was not building businesses. It was not believing in growth. Its greatest mistake was believing extraordinary conditions were permanent. That belief encouraged complacency. It discouraged preparation. It made risks seem irrelevant. America faces a similar psychological challenge today. Many people assume recent trends will continue indefinitely. Many believe technology will solve every problem. Many expect markets to deliver familiar results. Some of those assumptions may prove correct. Others may not. The future rarely follows a straight path. Economic progress often arrives with setbacks. Markets move through cycles. Human behavior remains remarkably consistent. Optimism rises during booms. Fear rises during downturns. People forget risks when conditions feel comfortable. Then they rediscover those risks unexpectedly. That pattern has repeated throughout history. It continues repeating today. The question is not whether America becomes Japan. The question is whether Americans recognize the lessons early enough. Because history rarely repeats itself exactly. but it often rhymes closely enough to matter, and those who listen carefully may avoid repeating its most expensive mistakes. Never judge a tired face because it may be hiding a brave heart.